We are just seconds away from that delayed jobs number. We're watching the futures this morning. They're up sharply ahead of that because of what we heard from NVIDIA last night. Dow futures up by about 250 points. S&P futures up by over 80. The NASDAQ now indicated up by about 425 points. Take a look at what's been happening in the Treasury market. We have seen higher yields. The 10-year sitting right at 415. The 2-year at 361 ahead of all of this. Rick Santelli is standing by at the CME in Chicago. And Rick, these numbers are much delayed, but still, it's data, and we will take what we can get, right?
Yes, and there's gaps. From the last data point to today's data point, there's lots of weeks missing in claims. There's months missing in all the other data points. And here we go. This is the September jobs report. Non-farm payrolls are up a robust 119,000. 119,000 would be the best since April, when we were up 158,000. In the rearview mirror, well, last month was downgraded from 22,000 to minus 4,000. Now, if we look at what's going on with the unemployment rate, it ticked up from 4.3 to 4.4. That was unexpected. 4.4 would, last time we were at that level, boy, I have to go back a ways. October of 2021, when it was 4.5%. Now, if we look at labor force participation rate, it ticked up. That's a good thing. 62.4 equals where we were in May. You have to go to April of this year when it was 62.6 to find a higher number. In terms of the earnings, average hourly earnings, month over month, up 0.2. That's a bit on the weak side. We're expecting up 0.3. Up 0.2 equals where we were in June. To find a lower number, you are going in the Wayback Machine to August of 23 when it was up 0.1. Take a year-over-year perspective. This gets better. From 3.7, our last look and expectation, to 3.8. 3.8 would be the best since July when it was 3.9 because these have been trending lower. The high water mark, though, for the year is 3.9, and we've had 4 months of that. The first 3 of the year were 3.9%. If we look at the hours worked, and this is always important, it remains at 34.2. To find a lower number, you're going to January when it was 34.1. And finally, we get U6, the underemployment rate. It was 8.1 our last look. It comes in at 8%. 8% would equal where we were in February. To find a higher number, you're going all the way back to October of 2021. Now, we have initial jobless claims. This is for the week of November 15th. As I said, there's weeks missing. We're expecting 227,000. Comes in at 220,000. These numbers do not reflect nervousness in the labor market. They've been very well behaved. 220,000 would be the lowest level of claims since mid-July. And finally, on continuing claims, it ramped up just a bit, 1,974,000, and that would be the highest level since November of 2021. We see that interest rates had gyrated a bit, but after the dust settles, they're coming in at 4.11, which is a bit lower than the 4.14-ish we were hovering at. The pre-opening equities certainly don't mind these numbers. They're moving higher. We're up 371 in Dow futures. And what I find interesting is these numbers are pretty good. They're not off the charts good. They're pretty good. The unemployment rate ticking up, though, that may fuel percentages and probabilities for that ease. However, it may not be appropriate to ease considering the puzzle pieces missing. Those are the words of the Federal Reserve with respect to yesterday's guidelines and the minutes to the last meeting. Back to the gang, and I don't know, it certainly seems as though the market is really holding up well in equities between NVIDIA and what's going on in this report.